Investors and traders, welcome to the channel. Today is 25th of January 2024. I hope everyone is having a great day. We are going to take a look at the key markets that we follow, and in particular, we will take a look at the key US stock indices. As always, this video is for educational purposes only and is not a financial advice. So, we will start by taking a look at the long bond futures. This is the daily chart of the Treasury 30-year Treasury long bond futures. And as you know, we had been discussing this pattern for quite some time now, since last week, and we were waiting for the market to come down to 118 and 28 seconds. And today what we have seen is actually market come fairly close. It came to 119, and it closed positive. So looks like this pattern is pretty much complete. We do have some news coming out tomorrow as well, Friday. We have the core PCE numbers coming out, so there could be some volatility, and actually this 118.28 level could actually be hit to the T. That's also a possibility. So what we are looking at in this pattern formation is if the market begins to move to the upside from here, that's going to be pretty good for the Treasury bond futures market. And as we know already, we have discussed this several times, the way the bonds move is when the price move higher, the yields move lower. So these are interest rate instruments, which mean that the market's expectation would be that the interest rates are likely to move lower moving into the future, and that's also a reflection on the market's expectations about Federal Reserve's actions moving forward. And that should also help the stock market and any other instruments which are dependent upon the interest rates, which are many of them our mortgages, loans such as credit cards. The 10-year note is actually used really to mark those. For example, per my knowledge, and I could be wrong, so put in the comments if I'm wrong, please. So this is why looking at this market is really, really important. While we are at it, let's also quickly take a look at the Treasury. So Treasury, again, this is the 10-year Treasury note, and we have had a positive day here as well. And if it is able to break above the 111 and 19 seconds, that's going to be pretty good for this market. Now let's see if we also have that ABCD pattern here. I realize that I have not drawn it here. I did that for the 30-year bond futures because that's more tradable for me personally speaking. It came pretty close as well. Here the ABCD is a little bit lower, but the 38.2% Fibonacci retracement is much lower. So this market is actually a little bit stronger than the 30-year long bond futures contract. Okay, that's good. Now let's take a quick look at the dollar. So this is the daily chart of dollar index. Dollar was stronger today compared to the yesterday. It actually recovered a fair amount and is again testing the 78.6% Fibonacci retracement. If it is able to break out of it, the strength in dollar could actually take it to 104 level, 104.26. That's where we have this swing high, this structure coming in. So that's also a possibility. The stronger dollar would usually mean it will have an impact on commodities and precious metals, for example. Okay, let's also have a really quick look at Japanese yen. So here we go. So this is Japanese yen, and again here the yen has actually today not been that much weaker compared to the dollar, and in the dollar we see more strength, but looks like actually the Japanese yen is kind of fighting back, and we don't see too much movement in this currency pair. Quickly take a look at the Euro USD because we have the ECB come out today and they kept the interest rates the same. And in fact, what we see is pretty much the mirror image of the dollar index. And here the euro is weaker, as we already have seen. Per the dollar index, the dollar was actually stronger against a basket of currencies. Okay, now moving to the energy markets really quickly. So we were taking a look at the crude oil market. So this is the light crude WTI contract that we are looking at. And here what we see is we were watching for this one-to-one price projection ABCD pattern coming in around $77.66. And this is where the market has pretty much gone. The high was today 77.51, so it was pretty close, and the candle closed pretty strong today. So there is strength coming in the crude oil market and the energy markets in general. Now we generally only look at just the crude oil contracts, but if we were to really go deeper into the energy markets, then we should also be taking a look at the gasoline contracts, heating oil, and also the RBOB. So maybe that's another segment on these markets, the energy markets on their own, for another time. But for now, this is just telling us that the momentum has improved. There's strength coming in. We see this kind of an inverse head and shoulder pattern being formed. One of the things that I personally like to take a look at in the inverse or any head and shoulder pattern is basically the concept of symmetry. I would really like to see the shoulders being pretty symmetric, and we have quite a lot of symmetry here. In fact, not a perfect one. The perfection doesn't exist in this business, per my opinion. But this one is pretty close by. So there is a formation of inverse head and shoulder, and we could see a decent move from here to the upside in the crude oil market. And again, the kind of target shorter term, we were looking at 77.66. It's pretty much there already, followed by that 79.76. That's the top of this range here, and above that, of course, that makes the crude oil pretty bullish. It is already quite bullish in my opinion at the moment. Okay, so after covering that, let's move on to the stock markets. So here we go. We are going to take a look at the cash S&P 500. This is the daily chart, and here again, this is the pattern that we have been watching. And today the market was really interesting. If you're watching it intraday, we did have a gap opening to the upside, I believe, and then around the 10:30 Eastern time, that's New York City time, New York time, the market actually formed a top, then it began to sell off, and then later in the afternoon, we saw a rally back in the market, which actually took it to that level pretty much where the market was at 10:30 in the morning. So kind of we are sort of a U, sort of a reversal there. So very interesting to watch intraday. If for those of you guys who are shorter term traders, maybe something you also witnessed. Again, what we are looking at is this 49.08, 49.10, roughly speaking level. That's where the market is at the moment and formed an inside bar. So we are watching this longer term, this ABCD price pattern formation in this market. Let's also quickly take a look at the ES. So here we go. The ES is there as well. We were watching for a 49.40 level, and the market has pretty much very close. It came very close to it. Tomorrow we have key data coming out. Maybe it just actually goes and hit that number exactly 49.40. Above that, we also have 49.75, but that's a little bit different because that's the 1.618 extension of a previous swing right here. And what we were looking for shorter term was this 1.618 expansion. And here we go. That's the weekly chart as well. Okay, let's take a look at the Nasdaq 100. So this is the daily chart of Nasdaq 100 futures. Slightly different picture here compared to the S&P 500. S&P 500, you can see, actually closed positive for the day, both in the futures and the cash index, but not the Nasdaq 100 futures. And we of course have this 1.618 expansion, but our really key level was 17,700. Here we go on the weekly chart, and this is exactly where it went. Actually, 17,700. It went a little bit above that. That was yesterday, and today it actually is kind of consolidating around that level, because it's just the inside bars. It's just maybe waiting for some sort of data, further data to come out, which is coming out tomorrow. On the shorter term, we also have this one-to-one ABCD just completing around here. But from a momentum perspective, the market remains strong. It's above the 20-day moving average, which is above the 200 day moving average. So that's pretty good. Actually, let me make it visible. So this gray line is the 200-day moving average. So look how much gap is in there. That's pretty strong actually. uh, Dow Jones. This is the E-mini futures here. So this market, as I mentioned yesterday as well, we have this ABCD pattern completed, and now the S&P 500 has done the same as well. And this market is just not moving anywhere. It's just been consolidating around here, and maybe it's just the markets which actually go in a pretty long range, and they're coiling inside. They're really waiting for an explosive move, and we are just going to wait and see whether that's going to come to the upside or the downside. But we do have this pattern formation that we are watching, and also in the S&P 500. Now, let's take a very quick look at the Russell 2000. So Russell 2000, again, not doing much, just around the 38.2% Fibonacci retracement. And yeah, so this is how the market actually unfolded for today. Just really wanted to have a quick video to update where we are. So thank you very much for watching the video. Good luck and good trading.